I Yeah. Yep. So basically today we will be starting about what exactly is this mutual fund, how mutual fund exactly works. So we will be looking into this all stuff here. So yeah, just a second. Like as a mutual fund advisor. So basically as a mutual fund advisor. So yeah, what exactly is this mutual fund is about? What exactly is mutual fund? What exactly is this mutual funds? What is this? What exactly is this mutual fund? So we will try to understand this today. Okay. So from the layman language, I will try to tell you how exactly mutual funds works. Okay. So how to invest. Okay. So what is asset allocation in mutual funds? Okay. What is AMC? What is NAV? A lot of terminologies. We'll try to clear everything today. Okay. In a layman language. Okay, so we will try to do it. So what exactly is this mutual fund now? So it's simple. See, when you have a car basically, okay, when you have basically a car, so you don't know to drive the car. So basically, what you will do here, what you will try to do here, so you will basically try to hire a driver, correct? You basically try to hire a driver here. Yes or no? To drive a car to take you wherever you want. Okay, so same like that also. If you want to invest in stock market but don't know how to invest, which stock to pick. Okay, where to invest at what time? Should I invest in small cap, mid cap, large cap? Which I don't know. How to pick stock? You don't know. Then what we need to do is like, yeah, that is where the picture comes about mutual funds. That is where comes about mutual fund. Here, what happens in mutual fund is like basically, so these people will take care. Who are those people? Yeah, I will tell you in a minute. So here basically these are basically are drivers for us. Okay. So these are smart people, okay, who's known as fund managers. So these are the people who try to take our money from our side and try to invest in best stock, okay, doing a lot of research about it. Okay. And they will invest there and they will try to, if they're getting any profits, they will try to distribute the profit. If they're getting any losses, they will try to distribute any losses. So this is how the journey basically works here. This is the basically journey how it works. So now we'll try to understand mutual funds. See, now what happens, so in mutual fund industry there are lot a lot of AMCs. What exactly is this AMC now? What exactly is this now? AMCs now. So basically AMC is asset management company here. So AMC is basically what? It's a asset management company here. So what exactly asset management company does here? What exactly asset management company does here? So name itself tells us that asset management company is like, so these people will try to manage our money. For example, who? ICICI Mutual Fund, correct? SBI Mutual Fund, HDFC Mutual Fund. So many others are there. There are more than 40 or 50 AMCs are there in India. So these people generally try to do what? These people generally try to collect money. These people generally try to collect money from the people, collect money from the people. How exactly they will do? How exactly they will do? So when AMC come into the picture, so what happens here? So everybody, I guess everybody know about IPO, correct? So IPO is basically whenever a new company is coming into the market. So at that perspective, what happens here? So whenever the new company is coming into the market, so that is when the IPO comes into the market. That is initial public offering here. That is initial public offering here. So here what happens, in mutual fund, there is the same case here. So AMC will try to issue. I told you, example, the AMCs are ICICI, HDFC, SBI, and it goes on. Correct? It continuously goes on. So now here what happens? AMC, that is asset management company, will try to do what that is known as NFO. What is NFO now? New fund offer. Basically, new fund offer. You're understanding, right? Basically, it's a new fund offer here. So it's kind of a IP only. So they will tell that we are issuing a small cap fund, that is HDFC small cap fund. HDFC small cap fund. So in HDFC small cap fund, what happens basically? This will be managed by fund managers. This will be managed by who? Fund manager, basically fund manager. So here in the fund manager perspective, what happens? This guy will be very good at whatever he's doing. Okay, I will try to show you exactly how this looks also. Everything I will try to show you. Okay, so now what happens? AMC will issue a NFO. Okay, AMC will issue an NFO for you, and then for example that they are telling that we are going to issue a HDFC small cap fund. See, every AMC can issue a single same category fund. They can't tell that HDFC small cap second fund, HDFC AMC third small cap fund. They can't do like that. So that is like small cap, only one fund can be there in one category. This is rule set by whom? SEBI. The rule is set by SEBI here basically. So this is how it works. See, now actually SEBI won't control mutual fund. There is another entity that is known as AMFI. That is Association of Mutual Fund India. Okay. So this is a non-profitable organization who completely manages mutual fund here. And SEBI manages AMFI. Okay, and SEBI manages AMFI. So now basically you understood, right? Mutual fund is like AMC, asset management company. Asset management company will issue a NFO, that is new fund offer. And when it comes to like HDFC small cap, example HDFC small cap fund. So now this will be managed by fund managers. So now they will tell that, okay, if you want to invest in this fund, okay, the minimum is 100. So maximum whatever you want to invest. So they will try to give a 1 month period so that a good asset will be collected. That is known as what here? AUM. So what is AUM? Basically, asset under management. AUM is basically asset under management. So they will try to manage whatever amount they have collected during this 1 month. For example, they have collected somewhere around 10 CR. Okay, they have collected somewhere around 10 CR. So what they will try to do here? They will try to manage that 10 CR. So now they have mentioned that small cap right here. So the major of money will be going to the small cap only. The 60% of money will be going to the small cap only. You're understanding, right? What I'm trying to say. So basically 60% of money will be going to the AMC only here. Sorry, 60% of will be going to the small cap only. Okay, remaining it again they will put little bit in a large cap, mid cap. Okay, and different, completely different. Why they're trying to avoid risk here? See, this is the one advantage of investing in mutual fund. So you will be not investing in a single stock. You will be investing in a lot of other stocks also. You will be investing in a set of stocks. Okay, that means your risk will be diversified here. Your risk will be diversified. Your risk will be moderate here. According to moderate, also you can choose. Extreme risk also you should choose. It's completely up to you. Okay, I will try to show you exactly how this works. So I guess you are understanding this here. So mutual fund is all about basically AMC, asset management company. Asset management company will issue you a NFO, that is new fund offer, and then new fund offer whatever the amount is collected. For example, 10 CR is collected. So this 10 CR is managed by fund manager. So now what they will do is like, see, whatever amount you have invested, no, they will try to invest in a bit by bit in the stocks. So whatever the stocks, so they will be mentioning you everything that where exactly they're investing everything. So that is known as fund fact sheet. That is known as fund fact sheet. Okay, let me show you how exactly the fund fact sheet looks like here. Okay, so now when I go for here, or like we can go for this also. This is ET money. So now I type that HDFC. So I'll go for mutual fund. Yes, small cap. See, here they have mentioned that HDFC small cap fund direct growth. See, there is a two difference between here, direct and regular. Okay, what is this direct and regular? What exactly this direct and regular means here? See, regular means basically as a mutual fund advisor. So when I'm suggesting a mutual fund, when I'm doing a asset allocation for you, so I will try to choose regular funds so that I will get some commission out of it. And when you choose direct, you will be directly investing to the AMC. Okay, there will be no advisor for you, and whatever analysis you are doing, that's up to you only. Okay, that is how it works. See now here what happens, I have like removed HDFC small cap direct fund here. Okay, so this is like NAV. What is this NAV now? What is the meaning of this NAV? Yeah, this is very important. See, it's like a share price only, but this is mutual fund price. So NAV is basically net asset value. Okay, it's basically net asset value. Okay, so this eventually try to grow. See, this today's NAV increased by 0.42 percentage here. It increased by how much? 0.42 percentage. This was 1 year return of this exactly fund. This year fund. Okay, see, I told you about AUM. AUM means what? Asset under management. So basically, this fund is currently managed 36,828 crores. This is how much they're basically managing under HDFC small cap, under HDFC small cap fund. So now when I scroll it up, you can see NAV history. So basically NAV, I told you now. So here what happens, you know how your share prices increases. For example, like 100 to 200, 200 to 250, 300. So this is how it will try to increase, right? So same here also, NAV will increase basically. NAV will increase from 10. So basically it will be starting from 10 only. It will be starting from what? 10. So from 10, it will be going to, see here, it is currently now how much? 161. So it started from 10 only when it was introduced as a NFO. I told you, new fund offer. When it was new fund offer. Correct? Now what happens? Now I'll scroll down. Yeah, you can see everything here. So they have mentioned the terms and conditions, everything here. So HDFC small cap, yeah. What is this expense ratio now basically? What is this expense ratio here? So see, now you have hired a driver, right? Basically. So if you have hired a driver, you need to give him salary. Correct. So that is basically your expenses, add-on experience, like expenses. So here also the same stuff will be there. So here also what happens? An expensive, like expenses will be there. So that is how much? That is 0.68 percentage for you. That is for 1 year. That is for 1 year. You understanding what I'm trying to say? So this is 1 year perspective. 0.68 percentage. So if you're investing 1,000 rupees into 0.68 percentage, they will try to charge it. Correct? So this is how it works. So the here the charges will be very minimal. Here the charges will be in mutual funds, it will be very minimal. So that is maximum somewhere it comes to 2 percentage. That is max 2.2 percentage, 2.5 percentage, not more than that. So now what about this exit load? So basically what happened now, see, mutual funds are meant to be for a longer run perspective. Mutual funds are meant to be for longer run perspective. So because of that, they try to imply this thing. So people can just start it like speculating in mutual fund also. So because of that, what they are doing is like they are keeping an exit load here. What is exit load here? Like if you're withdrawing this amount, whatever invested now today, within a year, I will charge 1% of your capital. Okay, there are some rules and regulations depend upon the AMCs. What are AMCs? Asset management companies like HDFC, ICICI, SBI, Axis. So these all differs. So some people will be telling 1%, some will be telling 2%, some will be not keeping exit load. So this all completely depends upon the AMCs. And somebody will tell you that if you're withdrawing above 1 lakh, I will charge you 1%. It all depends upon the AMCs. So the lock-in period it's completely nil. Why? Because this is an open-ended fund. Okay, there will be two types of funds, that is open-ended and close-ended. So open-ended fund, anytime entry and anytime closing will be there. And the close-ended fund, the only opening will be at NFO. What is NFO? New fund offer. After that, what happens? 3 years lock-in period will be there. Correct. So now no lock-in period. Age is of this fund is 12 years and 9 months. So in 2013 it started. Benchmark. See all every time, no, whenever a mutual fund is coming into the picture, there will be a benchmark. What is a benchmark here basically? What is a benchmark here? Say in a layman language, if somebody is comparing you, they will try to compare with whom? They will try to compare you by your father, correct? Or like your mother. So that is how it is. So they will tell no how son is, how father is. This is the same stuff here. So always benchmark matters. Why? Because by just looking at this, we can see that okay, benchmark has given us 30% returns in a single year, and our mutual fund has given 40%. That means we are basically outperforming our benchmark. Correct? We are basically outperforming our benchmark over here. And if our mutual fund has performed 20%, so we have underperformed the benchmark here. So benchmark is very, very important for us. Benchmark is very, very important for us. Got it? So now you can see benchmark minimum investment. Okay, so there is a criteria there everybody will keep. So they here the minimum investment is in SIP. What is SIP? SIP is basically systematic investment plan. See, it's like a EMI but in an asset manner. So EMI you will be paying for a liability, correct? So you already took a car loan, home loan, bike loan, whatever loans you took. So whatever EMIs you're paying, basically you're paying the money to that car or bike, whatever. So here SIP means systematic investment plan. This works the same thing. If you want, you can do every day SIP or like weekly expire like SIP, monthly or quarterly you can do 3 months or half yearly you can do or yearly also you can do. It's completely up to you. So here what happens, a systematic approach builds here basically. Here basically a systematic approach builds here. So every month you can decide that I will be investing here 1,000 rupees. So the minimum is 500 only. The minimum investment is how much here? 500. Okay, in SIP. So if you're doing a lump sum, okay, if you're doing the minimum investment is 1,000 rupees. So what is lump sum? It's like a buying a car or whatever in a basically in a what? In a cash mode. In a cash mode. Correct? So this is how it is. Okay. So basically in a cash mode. So lump sum is like that only. So whenever you are investing, so you may be investing in a lump sum manner. So minimum is 1,000 rupees. So now risk, yeah, they have mentioned over here that is very high. Why? Because we are investing in a small cap fund. So because of that, they have mentioned here what? High risk. So they have given you like this capital gain also. So 20 percentage, and they have given you like for STDC means short term capital gains and LTCG means long term capital gains. So if you are making money in a short term perspective, so you will be basically charged 20 percentage of it, and in a LTCG like long term capital gains you will be charged 12.5 percentage after 1.25 lakh only. After 1.25 lakh, this is how it is. So now you can see the calculation. Yeah, I will show you this how lump sum and SIP calculation works, what is compounding. Yeah, so now let me show you the asset allocation here. See, mutual funds generally shows you everything where they exactly they're investing here. Okay, where they have investing here. So this is their asset allocation. But see, this name suggests us that this is a small cap fund, right? So small cap fund means basically they need to invest major of their chunk into the small cap only. They need to invest major of their chunk into small cap only. Correct. So now if you scroll down and if you see the major of chunk is that is 77 percentage in small cap only. Correct. Is in small cap only. So mid cap, it is what is the small cap and mid cap? Basically, capitalization of the market. Market cap will be there, no? So that is how they are considering small and mid and large here. So I told you that major will be small cap here only. So now we can see the stocks as well, where exactly these people are putting, which stocks they're putting. So you can see top holdings, top sectors, service sectors, they are majorly focusing on healthcare, finance, and capital goods. So these are all are basically their stocks. So if you want a detailed portfolio, yeah, definitely you will get that detailed portfolio exactly where they're investing, which stock they are investing, everything you can look into here. So these all are their stocks. See, so many stocks they are investing in it. So if you are investing a 500 rupees also, your 500 rupees will be splitted in this whole part. So that means your risk will be very less. Now, if you think you're just betting a 500 on this Aster or something like that, so it will be pretty much risk for you, no? Correct. So instead of that, you put 500 in mutual funds. So what they will do, they will generally put every your 500 will be divided for full of your stocks, this kind of stocks. So you will be having a less risk here, no? Correct. So this is an advantage of investing in the mutual funds. You will be getting a well diversified portfolio here. You'll be getting a well diversified portfolio here. Got it? So this is how it is. So here we have a lot of other AMCs as well. Here we have lot of other AMCs as well. See, Bandhan, Nippon, everything we can see. We can do a comparison. We can see how exactly how. So these people are getting this much return on 3 months, 6 months perspective. This much old. This is AUM, and yeah, this is like everything they have mentioned here. So these many AMCs are basically here in the market. Correct. So now we can understand by looking at mutual fund that so if you don't want to invest your money in the stock market, if you're afraid, you can go ahead and you can park in mutual funds. So these people generally help us to do the stuff what which we are not able to do here. Got it? This is how it works. See, now here what happens, no, I will try to explain you these things. See, there are n number of types of this thing, categories. See, so many categories we can see here. So we can divide them into like what you say three or majorly three. So what are that majorly three? See, like you can say it as a types of mutual fund. So in the first type of mutual fund is equity. It is basically what? Equity funds. I will tell you what is equity funds. And the second one is like debt fund. Anybody heard about this debt fund? Debt fund. And third is basically hybrid fund. Hybrid funds. So you can categorize in the main three types. So there are another also like you can say index funds. These are also there. Fifth, like you can go for ELSS fund. But if you ask me, these are three are important. Three are basically important ones. So we will try to keep this ones. And equity fund. What is this equity fund means? See, equity, the meaning itself like that it is stocks. So major of chunk, as I told you in the small example, I told you know how mutual fund works. Like mutual fund is like, again it will come to the AMC part, asset management company. Asset management company will collect our money by NFO. NFO, when you collect the money, so you need to give the where exactly you're investing. So you can tell them that this is an equity fund, or this is a debt fund, this is a hybrid fund. So this now exactly what equity fund. So these people are parking their major of money into stocks or like shares. Major of money they are parking over here. So these are basically high returns and high risk. High return and high risk kind of stuff here. High returns and high risk. Why? Because see, equity, you know, right? So stocks can go from 100 to 1000, 1000 to 500. So volatility will be there here. So equity fund, if you're choosing, that means it's a high return and a high risk fund. Okay, so if you were expecting that, okay, I'm a risk taker or something like that, definitely you can go ahead and you can pick equity fund here. So what about debt market here? So debt funds are basically are investing in bonds. It's basically investing on not investing on bonds. Bonds means what? Loan only. Investing in government companies, bonds. Okay, where you will get fixed returns kind of a stuff. Fixed returns. So that fund is all about that one. So here what happens? This is basically safer and low risk and low return as well. Basically safer, low risk and low returns kind of a stuff in a debt fund. This is how debt fund works. So there will be very less risk. Why? Because fixed asset like fixed returns will be there for you there. So if fixed returns are there, so then they will be investing in bonds only. That is debt. That is debt fund. So in hybrid fund, what happens basically? It is basically what? It is basically mixed of both. It's basically mixed of both. What are mixed of both means? Mixed of equity plus debt. Equity plus debt here. Equity plus debt. So it will be a balanced kind of a stuff. It will be a balanced risk and return for you. Balance risk and return for you. So this is how it works. So these are main three criterias there, main three categories of mutual funds. That is equity, debt, and hybrid. Equity, debt, and hybrid here. So now, what exactly we need to pick? How we need to pick the which one fund? Like we should go for equity fund, or we should go for debt fund, or we should go for hybrid fund. For that, what we can do is like it all depends upon how much time you have in the market. For example, I want to invest a 10,000 rupees over here. I want to invest 10,000 rupees over here. So this 10,000 rupees, now you don't want this 10,000 for next 10 years. For next 10 years, you don't want this 10,000 rupees. So then what we can do is like we can go for equity funds. You can go for equity funds here. Why exactly? See, we are giving a sufficient time to market to perform. See, equities are basically what they need a good amount of time to perform, right? A company can't give you profit in a single a day only. So they need a little bit time here. So if you're investing in equity, you literally need time here. See, again in equity now, there are criterias here more. That is like large cap, mid cap, and again small cap. So again, large cap are basically these are well established companies. Well established companies. So again, if you're investing here, here you will be getting what? Here you will be getting a moderate kind of returns with a moderate kind of a risk, but risk will be there. Why? Because your name itself tells you that is equity. And here mid cap again little bit risk and more reward. Small cap more risk and more reward. So if you have more and more time, you can easily shift small cap or mid cap. You can choose basically small cap and mid cap over here. So if you have a longer time. So if you have shorter time but still want to invest in equity market, equity funds, then you can go for large cap. So this is how it is. So now this is if you want to invest for longer term, try to choose equity market because we are not timing the market. Because we are not timing the market here. Correct? You're not timing the market here. So now the next is like debt. So I have 10,000 rupees here. I have 10,000 rupees here. But what happens? I want this money back within a year only. So now what we need to choose is like the best is like debt funds for us. The best is debt funds for us. Why exactly? Because we have a shortest time duration here. So we can't take a risk here. So we can't take risk here. So because of that, we should go to what? Debt funds here. We should go for debt funds. So here in a year, you will be getting fixed returns like 6, 7 percentage, 8 percentage, 9 percentage, depend upon the funds, depend upon the AMCs. So when you have smaller time frame, then definitely you can approach debt funds. You can approach what? Debt fund. So when it comes to index funds, when it comes to index fund, basically, no, no. When it comes to hybrid funds, hybrid funds. So in hybrid fund, basically what happens? It is a mixed approach now. So if you have a short term, like 3 years to 5 years you are. So again, you can approach for the hybrid funds. Here what happens? Like 50-50. Depend upon the fund. We have aggressive and conservative also. As of now, I will tell you in 50-50 manner. So they will be putting 50% in debt, 50% in equity. So here what happens? You will be in a moderate risk kind of stuff. You will be in a moderate risk kind of a stuff. So you can definitely prefer this one as well. So if you have a lesser time. So it's all about time, how much you have. So if you have less time, then definitely go ahead and invest in debt fund. If you have moderate time, then go for the hybrid funds. If you have very longer time to wait or something, then try to prefer what? Equity funds. Okay. So now what are the advantage and the benefits of like mutual funds here? Mutual funds here. What are advantage and benefits of mutual fund here? So basically, the first and most important is like managed by experts. As I told you, managed by experts here. So this is a very important thing. Okay, so they are good at their stuff. So it is very important thing. And like diversified, diversification is very good here. Diversification is very good. So that is a most important thing for us. Diversification and easy to start. There is no such complication to here. Every platform you can start a mutual fund immediately. Even you can start from 100 rupees also. You can start from 100 rupees also. Okay, that is how it is. And like flexibilities. If you want to, you can exit also. You can anytime exit, anytime entry will be there for you. So that is how it works. That is how basically it works. So these are basically benefits of a mutual funds for you. Managed by expert, diversification, easy to start, flexibility, everything will be there for you. So if you are putting a money in a single stock, that is a very riskier thing. So either you can go and you can choose this one. So this will be a very good you to start. That is what I can. So now let me take you and let me try to show you how exactly this all looks like. So now we have a platform called a Morningstar. So what we can do is like, so all fund houses, that is so many fund houses I was explaining about. So many fund houses are there. So now what I will do is like, I will try to tell it like here, these people Morningstar, they will try to medal them like gold, bronze, negative, under review, everything they will try to review. So what we will do is like, yeah, now category, I want to see small cap funds. So when I put small cap, so they have mentioned here dividend and growth. So always try to choose growth. So if you choose dividend, basically what happens, whatever the profit you are getting, they will try to give you back every quarterly, every half yearly or yearly. So that if you want that kind of stuff, then go ahead and choose dividend. So if you don't want, then to choose growth. Okay, the another name of dividend is like IDW, income come capital withdrawal plan. So that try to avoid. So here I told you na distributor and direct. So if you are taking a help of like a mutual fund advisor, he will help you out everything end to end how to pick and fund. As of now, you can choose this one, whichever you are comfortable. So now when I click on go, so no here funds why exactly to go all fund houses go. Yeah. So basically they have given you so many like mutual funds here, so many mutual funds this is, and they have given rating as well, that is Edelweiss small cap. So Edelweiss small cap is a very good fund. Yeah, I personally suggest this also. Why? Because of like fundamental of this Edelweiss small cap is very good. So you can read everything here. So overview, this you can see how the like performance was there here, basically investment performance, everything literally we can see here. And one more thing is like portfolio. So which all stocks these people are holding here. So which all stocks these people are holding here. Base metals, everything we can see here. Just a second. Yep. So these are the stock they're holding. So 84 currently they're holding 84 stocks here. So basically they're holding 84 stocks here. So everything you can look into with the stocks and you can see how it is. Every stocks they're investing in. Everything you can see. Performance you can see how the performance is going on. Just a second. Just a second. It's loading. So same all mutual fund category. I want small cap, small cap, and this is only I want growth option. Go ahead. Yeah. So when I choose this one, so you can see equity holdings are 84, bonds holding are like other holdings are 3, total holdings are 87. Everything stocks you can see here how much performed, how much everything you can see here. This is the transparency of the mutual funds. So they'll tell you that exactly where they're investing, how much money they're investing, how much percentage they're holding. Everything they will try to tell you. So if you're good at analyzing the stocks or something like if you want to analyze, you can pick the stocks from here also. That is a shortcut for you. So these people are already doing analysis. So you can pick stocks for here for your investment as well for another set of people I'm telling you. So if you don't know directly, you can pick stocks like mutual funds and you can start investing in mutual funds. So if you have any further queries, you can reach out to Livelong Wealth as well. So here we have like as I'm a mutual fund advisor basically, so I can also help you out to build your own portfolio, how it works for a long term. See, this mutual fund is all about long term only. This is all about long term game. So your asset allocation should be very good here. Your fund speaking should be very good. So you should be knowing when to rebalance your funds. So that all stuff we will be doing as well. So yeah, so this is what I want to tell in this session basically. So in a layman language, what is mutual fund, what is AMC, asset management company, and what are those things. So I will show you one more thing. So here, if you see, I'm picking, see here types equity. So I'm going for a, yeah, small cap. See in the small cap perspective, they have mentioned here who all are basically fund managers. So they have mentioned here, right? So they just so his work experience. Okay, everybody fund manager experience, how much portfolio they're handling, everything they will be letting you know. So this is how it is managed. Correct. So this is